Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the August 10th stock market wrap-up for you to use on August 11th. First off, let's go and just look at the New York Stock Exchange. First, you see that it was down 0.56% today. You see that volume was huge on Telechart. However, that is wrong. Once again, Telechart, you have the wrong volume on a daily NYSE day. And if you look at the NASDAQ, you can see that it was down 0.40%. Look at the volume compared to the day before. That's what this volume should look like. So you can see the lower volume today. Well, that's what that bar should look like right there on the New York Stock Exchange and the SP 500. However, Telechart doesn't like to tell the truth all the time, so what are you going to do? Biggest, most important thing is that the SP 500, as you can tell by this intraday daily range, you can see that it was down almost 1% intraday on some of these indexes. You can see that it pulled back. However, when it hit 1979.39, it found a low here on the NASDAQ. And whenever it hit, let's go to the SP 500. Whenever it hit 1,099 on the SP 500, it took off, closing at 1,007 on the SP 500. Closing at 1992 on the NASDAQ. The NASDAQ's reversal wasn't as bullish as the others, but still that's very bullish to at least come back intraday by the close and to give up almost all the losses. It opened up, it actually gave up all the losses because it opened up at 1991 before rallying up to 1999 before selling off, but it came back to 1992. So it actually closed higher than the open. So congratulations, NASDAQ. To me, that's a bullish day. Anytime you can close higher than where you open, that's bullish. The New York Stock Exchange could not close higher than the open. However, that tail is bullish, and that's all you have here. Since we kind of hit the high back here on the 3rd, kind of just gone sideways for 1, 2, 3, 4, 5 days. You can see the market's down 0.24%, barely down. And you can see tail. The low of day was the open and another tail. So it's been a bullish consolidation pattern. Even though 5 days on the index does not make a consolidation pattern, still it's been what it's been. The NASDAQ hit its highs here on the 4th, and since then it's been 4 days of consolidating. 4 days you can see a tail, even though there was barely a tail on the big distribution day of a 1% loss. Still a 1% loss. You know, normally even in uptrends the markets can lose 2-3% on days and then keep moving higher. So 1% is nothing. And you can see in the past 4 days it's only down 0.95%, not even down 1%, and it shows the tail. So overall the indexes aren't that bearish. The only thing that's bearish is that look at Rhino after hours, one of our best longs, which I've already given you multiple profit-taking signals on. Multiple. It closed, I believe, at one point after hours it was down 17%. However, we've taken gains off at 60, 65, 70%. So wherever it's at now, we've already taken gains at much higher. But you know what? We're probably going to need to take more, but if you had 100 shares of Rhino, I know you have 50 or less now because if you've taken all my sell signals, I just know because I know what I got. So there should be no reason to worry. So the indexes still look fine to me. Biggest problem still is the NASDAQ still is losing its relative strength overall to the market. I don't have my IBD charts up because my desktop is being a terrible, terrible computer today, and my laptop's working. I did not look at the IBD indexes, but somebody gave a heads up and told me that the IBD 100 or the IBD 85, it's either the one or the other, was actually up today on higher volume. If that is true, I will look at my IBD indexes. I'll let Part 2 subscribers know, but that'll be very good. It'll be nice to see the IBD outperform the regular market. Still, overall, we know that the IBD 100 hit new lows overall, 52-week lows back in April, and we know the IBD 85 index just hit new 52-week lows 2 days ago. So the negative divergence isn't going to be fixed by just one up day compared to the NASDAQ being barely down. And don't forget the SP 500 was down the least today, down 0.33%. That's barely a loss, obviously. And a 2-day chart still shows a 1% gain. It was up 1.34%, 1.33 took out the 0.34 gain, only a 1% gain. Just shows in the past 2 days you still got gains, so it's not that bad. So we know what those look like. I'm going to also show you the S&P 600, show you how well it's doing. S&P 600 had that tail too, only down 0.09%. And then I think the worst index out of all these is the Mid-Cap 400. That was only down 0.67%. Once again, look at that tail. Very bullish. Very bullish reversal. Nothing to worry about. I'm going to look at China because I haven't seen China yet, so I'm going to see what it looks like after today, after today's market session and all these. A very bullish tail, finding these lows right here. Market Speculator has posted Bloomberg charts of China's Shanghai SE Composite, the Hang Seng Index, and the Shenzhen Index. And you can see the volume because for some odd reason, IntelliChart can't get volume. I guess they don't want to pay that extra $20 to have us pay an extra $1, which is stupid. I'd pay the extra $1 for volume, just like I'd pay an extra $5 for over-the-counter bulletin board data, and then I would pay another extra $10 for Canadian data, Pink Sheets data, any kind of data from any market that you can get data, where I can find a 15-day base with max screen bot before, on, after the breakout with huge volume. God, those charts don't exist. Instead, this is what we get. Now, this is great. If you're a day trader, seriously, I keep on giving stocks to day traders every day, and I say, if you're a day trader, trade this. If you're a day trader, do this. I don't day trade because I can't handle it. I'm not a good day trader. I probably am now because I haven't done it in forever, and I'm really good with my rules, which means I buy breakouts. I know how to spot topping and whenever things are looking extended, where I haven't before, just like SSP. If I bought this move right here, day trading, I bought the breakout, been watching this. It breaks out new highs, closing highs on strong volume, and I go long. All these up days I'm cool with, and then all of a sudden it has this big volume and big up day. Sorry, I'm taking profits right here, and I'm locking in my 175% gain. Now, if you're day trading, obviously, you're taking most of your profits each and every day. You just buy whenever it breaks out to a new high, and you sell it. And then whenever it breaks out to a new high, you buy and you sell. In the past 2 days, you probably got about a 70% gain, you know, if you've been trading it or whatever. But still, these gains are great. But, guys, I used to get these kind of gains. These are the kind of gains that I want, and I can't get these in right now. But this is what I'm looking for. This is what I'm interested in, not those kind of gains. 175% gain is very nice, and that's great for a day trader. But as a position trader, I like to get long and then twiddle my thumbs, and in about, as you can see here, 9 months, 1, 2, 3, 4, 5, 6, 7, 8, 9 months, you have a 2,390% gain. And let's say that you decided just to let the rest ride, and you decided just to let it all go. You could have been up with a 2,450% gain, and I don't know if it went much higher than here because I think, oh, there we go. There would have been the top. So let's go from here. So let's say that you held it the entire way from where we went long, and you held it all the way to the top. You got a 2,600% gain in 1 year and 1, 2, 3, 4, 5 months. 1 year, 5.5 months, 2,600% gain, long-term capital gains, not short-term capital gains, good old long-term capital gains. 2,600%, 2-to-1 margin, that's a 5,276% return in 1 year and 5.5 months. Okay, so you like to day trade. I like to do this. Well, you're just showing us one. No. There was my best one was this one, Hill. And look at what it did in a short amount of time with a big position. 340% gain in 1, 2, 3, 4, 5, a little under 6 months. So in 5 months and 3 weeks, get a 342% gain for a nice 684% gain on a big buy. And then don't forget that one that I keep showing you because it's just an example of being able to get long stocks off the bottom. We had 8, which delivered us almost a 350% gain in a little under a full month. On margin, that's only a 700% gain, 350 doubled. 700% gain in 1 month, and then the 700% gain in 5 months, and then the 5,200% gain on margin in 1 year, 5 months and a half. Guys, that's what I like. That's what I'm used to. And the recent Best Buy Rhino of ours, breaking out of a short base, well, what's the danger of that? Well, look at all this volume in here, all this loud noise, all this crazy trading, all this huge volume. Well, it finally served us up with a 17% drop after hours. That is the kind of market that we are in. It's not great, and it's definitely not bad, but like I just said, it's not great. It reminds me a lot of the short 2000 bull market that we had in the summer in New York City. Everybody told me I was stupid. Everybody told me that the next bull market's here. And I said, we have definitely topped. Look at JDSU, Microsoft, Cisco. Look at all these huge climax tops. Look at the climax top in the internet stocks. Come on. Look at the climax top of my best long LMLP. It was obvious to me. But they were all for sure it was different this time and that a new uptrend was coming on its way. I went ahead and moved to Maui. Who was right? So,